Vikram writes in through email. Now he wants to know the basic documentation needed to get a loan sanctioned. He asks who can be co-applicants, how is eligibility determined, and what is the repayment period. So again, a new home loan borrower by the looks of it. How do you determine loan eligibility?
Yeah, loan eligibility depends on your Form 16, which means what is your total salary. Assuming you are an employed person, it's your Form 16. If you are a business person, then the income tax return that you file. So that determines how much of loan you will get and who can be your co-applicants. It could be your brother, it could be your wife, it could be your son, it could be your parent. Any of them could be your co-applicant, and that person's income will also be taken into account while determining this. How is your loan eligibility determined? It depends on your repayment capacity, and repayment capacity is a function of how much you are earning and how much you are already borrowed. Suppose you have taken a car loan, you have taken another housing loan, etc. All that is eating into your repayment capacity. Now, if you are in a good company and you have good qualification, they are assured that even if you were to lose this job, you will get a similar paying job. Your wife is also well qualified, she is also working, then all that adds up. If your wife is earning somewhere through tuitions, etc., then that is not given so much of weightage. If your company is good and reputed, again your ability to borrow goes up. So it's a function of all this. They look at your last 6 months bank statement and they find that you're not spending too much, you're able to save a lot of money. They know you'll be able to repay well. So all these will determine. Now, if your father is a co-applicant and your father is 48 years of age, for the next 12 years, they're not worried about the repayment because your father will also. But if your father is retiring at 60, then to that extent, your father being a co-applicant doesn't help much. So yeah, all these things. But if you've got a younger brother or if your wife is more or less your age and you're both 30 years of age, you've got a whole 30 years to repay. Yes, you can take a 30-year loan. The longer the loan, the lesser the EMI that you will pay. But remember, the longer you pay, the more interest you're paying. So don't be tempted by a lesser EMI because you're getting a 30-year loan. If you can do well with a 20-year loan, take a 20-year loan. If you must, then go for a 30-year loan. So all these factors. What documentation you need? Obviously, residence proof like Aadhaar card and PAN card and salary slips, Form 16 and your bank statement. These should be good enough.
Right. Subra, also could you elaborate on credit score? Because we have a lot of first-time borrowers who've written or called in. On the importance of the credit score, because that is something that banks and HFCs are looking at very closely when they are giving you your home loan these days.
Yeah, see, the credit score which we are talking about is something which was there so-called to help the borrower, and the card, the score said how good you have been in repaying your past loans. So if you have some credit card which you have not paid, or some other housing loan or car loan where you have defaulted, or even very simple, your rent on which you defaulted, or your telephone bill on which you are not paying on time, all this goes against you and your score keeps reducing. But any score above 750 and you're in good territory. But if you have if you made a mistake, like you took a credit card and just threw it away, never used it, but it had 500 rupees charges, but that was 20 years ago, and today it is about 1,00,000 rupees because you just ignored them, all that is going to hurt you. So don't do anything very foolish, because all that is going to hurt your CIBIL score. And if your CIBIL score below a particular number, they will not even consider you for a loan. Forget charging you a higher rate. So when they just look at your CIBIL score and say, "Aapko hum loan nahi denge," it's something for you to be scared about. It is go and check your score and see how you can get it right. Largely, it would be something like this. Some credit card was sent to you, you didn't use it, and there was a minimum 500 rupees charge that got added, and then there you see the power of compounding, and suddenly today you will have to repay about 1 lakh. What do you have to do? Sit, fight, argue, take a letter saying everything is settled, make sure that goes into CIBIL, and it will take you another 6 months for your CIBIL score to improve. So please be careful about your leaving your financial footprints. Today, all your financial footprints are being measured by somebody called CIBIL. Of course, there are 2 others, but largely in India, it is CIBIL which will give you this.
And of course, it's the sources through which CIBIL and other companies, credit rating companies, can track your financial footprints will only keep increasing now that a lot of payments are getting online and getting electronic. One is often told that if you are planning to take a home loan, maybe a year or 2 years down the line, it would do well for you to actually go and get yourself a credit card and start using it. Are you on board with that?
No, I
Subra?
don't think so. Not in India, because we are still a very cash economy and people do use a lot of cash. So using a credit card is useful if you know how to use it very responsibly. But if you are not very sure, then don't take a credit card, because there's a chance that some bill remains unpaid and you actually ruin your score. But taking a credit card and using it is a nice way of telling CIBIL that you have arrived and you've taken 3,000 rupee loans and 2,000 rupee loans and you're repaying. So some kind of, they have some track record of yours. Is it necessary to do? It is advisable to do, yes, provided you have very disciplined. If you're not disciplined, don't get into it. You don't really need it, as long as you have your debit card. But yes, they will not know anything about you, but they will give you. If they don't know anything about you, you will not have a very bad CIBIL score. You will not have a CIBIL score, that's all. So you will still get it. But if you have a credit card and you did not repay at least once, that can bring your CIBIL score down. Does it help to have a credit card? I'm sure it helps to have a credit card, because you still have to buy your airline tickets and anything you want to buy online, you need a credit card. Use it, but you don't need to just to
You don't need it
score.
just to ensure that you get a home loan.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.